Hi. I'd like to continue talking about the affordability index, and in my other video I talked about the affordability index, and while it means anything over 100 is affordable, I'm sure you guys have other questions about affordability, and in this video I'd like to add more context to what goes into the affordability discussion. This is Tony, and thanks for watching my video. Before I proceed, please don't forget to like this video. That helps my video get found, and hopefully this information will be helpful to other audiences, especially if you're thinking of buying and you're scared or there's fear about the affordability. And again, if you're a seller, let me know. Let me help you price your home strategically in this competitive market. It's not just about the price, of course, but let's dive right in. And yes, while it's true that home prices are rising, as evidenced by the home price index just going up or trending up, I'd like to also shed light and focus on two major players, and they are rising income and the ever historic low rates. I'm sure you guys have heard of historic low rates for quite some time now, but those two key players help determine that affordability. And let's dive into a few statistics here. In November, the DMAR, or Denver Metro Association of Realtors, market trends report showed that a median price grew year to date of 7.14%. 7.14. And again, let's focus on the median, and median is literally the middle point of a data set, not the average. And why this is important is because those unusually high priced homes as well as the unusually low priced homes can skew the average, and it doesn't show a good picture, so we pick the median. And I'd like to point further that we focus on this median trend as opposed to the average, because this is the pulse that drives the price increases, if you will. I'm sure you know what's going on with interest rates, and for the 14th time this year, rates hit a historic low. And I know that market updates are just talking about how low rates are. Yes, it's been very, very historic low, and people are always talking about, well, when is it going up, or what's going to happen? Well, let me tell you a few things. While it's historic low, there might be there might still be some room for the rates to keep going down, and here's a few reasons why. An effort of the government to keep the rates low is that the Fed is buying long-term securities and they are selling short. The Fed is the biggest buyer of mortgage-backed securities, and they are buying them at $40 billion per month and as low as 1.5 coupon rate. Yellen, who was chief economist at some point, is a front runner for Treasury Secretary. She just loves low rates, and it's actually argued that she kept the Fed rate too low for too long and didn't give Powell enough flexibility to drop rates enough in coming into the recession. And inflation is muted at the moment, and inflation is the arch nemesis of rates, and it's not fighting hard. And a little thing about inflation happens with rising income, right? Or not necessarily rising income, but GDP, when that increases, and we all know because of the pandemic, it's all suppressed. We're not creating, we're not spending, there's a lot of elements that suppresses it. So inflation is not just going to kick in anytime soon. We'll see a build up to that. And the last reason is that lenders going public will appease shareholders and cut margins. the most ignored element or major player is income, or the rising income, that is. And while a lot of people will argue that, especially with the pandemic, people are just suffering, people don't have jobs, and so forth, there is a juxtaposition that we see in the headlines that the haves or the rich have more, and while the have nots, or the ones without, are suffering. The reality, however, and based on statistics, is that there is a rising income for the most part. And nationally, I'd like to point out that that's 5.3% in increase in real average weekly earnings year over year in the US. And while that's good, specifically in Colorado, we actually did a lot better, and we are at 8.7%. Denver saw an 11% increase. And I'm pretty sure you guys remember the local elections and stuff. I mean, as a state, we did vote in general. The state did, to vote for higher wages. And so here you go. That's one of the major elements. All those minimum wages were just like, it just rose significantly. I get it. You might be thinking Denver is just too expensive and it's just, unaffordable, that is. Yes, there will always be, other folks who might think Denver is not too expensive, especially, from out of state, like California or New York, moving into Denver. Yes, they may find Denver affordable. And, for some, it might not be. But again, talk to me. Drop me a line below. There's a link below where you can send me your information and I'll help you go over initial information, if you will. But I'd like to talk about equity gain. And while prices are going up, I get it. This just tells you that even with the pandemic, the market has never been stronger. And we're in such a position where there's a lot of equity being gained. And just last year alone, the Denver Metro homes gained $18,000 of equity. And again, a few details here why people should not panic, and about the crazy information that that's in the headline sometimes. Let's put stuff into context. And yes, while the pandemic led to a lot of people losing their jobs, again, pay attention to the unemployment rate and the jobs being created. There was a positive jobs creation in this last quarter, and unemployment rates have calmed down since April, that is. We still have room to grow and more jobs to create, but again, a lot of these players should be in context and should be explained very well, particularly the underwater or for homes that are going to foreclosure, or in question, if you will. CoreLogic said that only 1.5% of Colorado's homes are underwater. And what does that mean, 1.5%? But I'm sure all of you are asking, well, it could be worse or it could be more, we just don't know. Yes, but in Denver, actually, per Black Knight, Colorado has the third lowest foreclosure ranking, with only 0.1% of homes in foreclosure. So what does this mean to you? With all of these information, this is not the time to sit on the sidelines and wait for a housing crisis or a bubble. What's worse is keep renting and make your landlords rich. Again, we just saw an increase, just this year alone, of 18,000 gain in equity, right? So don't wait. Rates are historically low. They, business cycle or market cycle, it's cyclical, right? And so it's been historically low, and the government and the feds are making every effort to make sure that it remains low. And while we don't have a crystal ball to say when it's going to increase, now is the time. Talk to me and drop your information below. it is a time to buy while rates are low, to take advantage of what will be years of appreciation opportunity given strong demographic demand and a lack of supply. When I talk about inflation going up being arch nemesis of interest rates, so while interest rates are low, again, we don't have a crystal ball when that is, but we can have confidence and a surety that these things take time, right? And so is rates going to be around for a while? I don't want to give you the impression that you're missing an opportunity right this moment. Rates will be low for a while. I think we can all agree on that. Again, based on inflation, and inflation doesn't just happen overnight. We will see a trending up, and again, inflation is also correlated with GDP growth, and so when we start seeing those things happen, then you may see interest rates to go up. But again, it's not up to us, or it's we can't control those things. And so again, if you are on the sidelines, talk to me, let me know how I can help you, and again, more power to you, and hopefully this video is helpful. I hope you liked this video. Again, don't forget to click like or thumbs up or thumbs down. And if you have any questions, again, please let me know. And don't forget to hit subscribe. Thank you.